All About Stocks this week. The market is down 4.5%. We'll tell you what you should be doing now. Sharmila Joshi picks SBI and Redington as stocks you should be investing in. Find out why later on the show. And in the final segment, we answer your questions. Find out if you should be buying ONGC or Tata Steel right now. Welcome to All About Stocks. Now, it's been a very unnerving week for those of us invested in the equity market. A week when the Sensex lost over 700.4.5% its market cap. On this show, we'll find out, like always, how you can work through this and still walk away with a profit. Remember, this is a show for long-term investors, and there's an email ID at the bottom of your screen where you can write to us with your questions about your equity investments. It would be our pleasure to answer any of your questions on this show. Now, before we go across to find out which stocks you should be investing in, let's bring in Darshan, who has the latest on what happened in the market this week. Darshan.
It wasn't a very good week for most of the global equities. In fact, if you're seeing our markets, the Sensex and the Nifty were down almost 4.5%. The second worst performing economies in Asia, Hang Seng was down more than 9%. Our markets down 4.5%. Apart from that, across the globe, the US markets have been down around 6%. Europe has not been spared. They were down almost 6 to 9%. The CAC was down 9%. DAX was down 8%. And till Wednesday, we were doing pretty much well. But, post the FOMC meet, the market really took a big beating, a 700-point drop that we saw on Thursday. Which sectors didn't do well? Selling across all sectors. So if you're taking a 5-day view, none of the sectors did well. The sectors like capital goods were down 7%, metals was down 6%, real estate was down 4%, oil was down 5%. So all these sectors taking a big beating. Now, what really spooked the market? The big point here is that Bernanke actually didn't give any constructive view as far as the US economy was concerned. He said that he will be buying long-term bonds and that the interest rates will come down. But, that wasn't sufficient to convince the investors that everything is significantly well with the economy. And that is why you saw a big sell-off coming in the US, you saw a big sell-off coming out across everywhere. Apart from that, the other factor is that people are taking money off equities and they're putting it into safe haven. So the dollar at this point of time is considered the biggest safe haven, and that is why you're seeing it appreciating. A couple of these US banks, they also got the downgrade. So you had Bank of America, you had Wells Fargo, Citigroup, all these banks were downgraded. And Bernanke, on the other hand, he also said that he sees significant downside risk coming to the market. So that is something that the world doesn't want to hear.
Thanks, Darshan. Now, like we heard, the big concern this week was the depreciating rupee. It fell to nearly a 2-year low, inching closer and closer towards that 50 rupee to $1 mark. It's important for us really to understand what happens to our economy every time the rupee depreciates. Which are the sectors that get affected? Manisha Gupta, our commodities editor, is here to help us understand that. Manisha, take us through what sectors will get beaten in because of this, and which are the sectors that really benefit.
Indian rupee has declined to 28-month lows. We saw it hit a low at 49.88 levels. And while it has declined 8% in this year, it also is off nearly 12% from 2011 highs. While the depreciating rupee is good news for exporters, the importers definitely are feeling the pinch there. The major import-dependent sectors are pharma and the power equipment. Also in the food section, pulses and edible oil is what we import the most, and the prices for these commodities have run up in the festival season. India also imports 70% of its crude oil requirement, and that is where your petrol, diesel and kerosene prices come in from. India also imports most of its gold requirement as well, and with the gold prices on the higher side and the rupee depreciating, the prices of gold also has been on the higher side. Coming to the export sector then, and textile, jewelry exports are the major sectors here. It also has to be the IT companies, which have run up quite strongly because of the rupee depreciating there. But net, we spoke to some exporters and importers, and they tell us that the high volatility in the Indian rupee is something that really has nullified any gains for them, because most of the exporters also are importers of raw material. Apart from that, we also spoke to some importers, and they have been delaying the payments there, waiting for the rupee to stabilize at these current levels. Going forward, the rupee can be traded between 46 to 49 in the coming quarter is what most of these exporters and importers are expecting.
Right, Manisha. Thank you. We also have Sharmila Joshi of Fair Wealth Security. Sharmila, thank you so much for joining us on All About Stocks. It's been a scary week for retail investors. We've lost nearly 2 lakh crore rupees in market cap. From a retail investor's point of view, I have a long-term horizon. I'm looking at what's happening in the market right now. My capital is being eroded away every day. Would you say this is the time to maybe pull out, put some money in cash, or would you say remain invested and just wait?
I think it largely depends on what kind of an investor you are. If you're seriously long-term, and I think that we are addressing retail investors who want to stay invested in the market for 2-3 years, then I think this is really, it provides you with an opportunity to enter the market or to buy. And if you have anything really to stay invested, it's certainly not a market to sell in. So, for retail investors, I think this may not be the best environment, but I think that's what you need to remember, that you can't really invest when the sun is shining and there is no cloud in the horizon. But you have to start investing now and then stay invested through the bad periods so that you can take advantage of markets when they move higher.
So when you say start investing now, are you recommending that maybe they start deploying a little bit of money and buying some stocks that are of good valuation?
Absolutely. And I think that in corrections like this, you really get a window of opportunity to invest into frontline stocks, which at other points in time are always at slightly higher valuations. So it gives you a good entry point to get into some really the blue chip or the really the creme de la creme of the Indian stock market, and then you can just be really, I think, proud as a shareholder that you own a stock that that is representative of the Indian economy.
Before we start talking about sectors that we should be investing in, are there any sectors right now that you would prefer to stay out of, or that you would recommend the retail investors stay away from?
Yes, I think there are a couple of sectors where I don't think that perhaps it's a great place to be invested in. I think one space is real estate, and I say that fully realizing that real estate as a sector has a long way to go in India. But I think it's just the lack of clarity one has on a lot of issues as far as the real estate business goes. And then coming to the companies, there are a whole host of issues. Some of them corporate governance, some of them the kind of high debt that they have. So I think, and honestly, beyond the point, I really don't understand how their valuations are done, how the bank values are arrived at, what are the costs you're taking in, is this land actually owned by the companies who are developing it, etc. So I think it's just best to stay away from real estate as a sector. I think another sector or other stocks that you can avoid are perhaps stocks that are so dependent on government intervention and are really sensitive in that sense. So from that perspective, I mean a stock like an HPCL, BPCL, oil marketing companies.
Stay away from real estate and stay away from sectors that have huge dependency on government policy. We have a couple of questions that have come in, and the reason why I pulled up these questions is because they're about sectors that are dependent or connected to currency fluctuation. Abhishek Dey has written in, and he tells us he's invested in Satyam or Mahindra Satyam at 66 rupees. He wants to know at what price should he hold his stock. Now, Mahindra Satyam is currently trading at about 70, 71. It's down from 94 rupees where it was in July. Would you recommend he holds on?
Yes, I think he can hold on to Mahindra Satyam. I think without doubt, as you said, that IT stocks as a sector has seemed like a safe haven, in this last week with rupee depreciating. But I don't think that a depreciating rupee for long will really be very good even for IT as a sector. But coming just to Mahindra Satyam therefore and looking at what they've been through and where they've come, I think they are moving along a set path, and I do believe perhaps 80-85 kind of a level is possible on this stock, and perhaps then he should look to exit. What I can alternately also suggest is something that I said earlier, like this is giving you an opportunity to enter into quality names. So why not use this opportunity to switch really and sell off Satyam and buy maybe a TCS which has corrected quite a bit in this since post in the last 2-3 months, or even an Infosys for that matter at this level, or an HCL Tech. So that would really be my order of preference: TCS, Infosys, HCL Tech.
We have a question from Ashish Mukherjee, who tells us he wants to buy Titan Industries, and he wants you to tell him which was the proper time to be buying that stock. Is this really the time to buy into Titan Industries? We know that gold is largely very impacted. A lot of our gold is imported, and of course a change in our rupee valuation will impact companies that deal with gold. So what's your call right now on Titan Industries? Would you say that he should buy it now?
Strangely enough, Titan Industries' correlation with gold prices has been a positive one. So it's quite surprising that in the past, at least, we find that if gold prices have moved up, then it's not really meant that, Titan has not done well or their jewelry brand has not done well. But I think, coming, just to look at Titan as a stock, I think, the fact that it belongs to a sector which everybody loves at this point in time, that is consumption, and, you see a whole, about a bunch of 5-10 names which draw investor attention all the time, Titan being in that list. It's very difficult to say, what's a good level to enter, because I think if you want that stock, then I think it's just best to buy a little bit, like if you want, partially 25% of what you want, and then, really that will help you start tracking the stock.
Alright, a buy there on Titan Industries. Remember, you can write to us on the email ID at the bottom of your screen if you have questions for any of our experts. We're going to slip into a quick break. On the other side, Sharmila has picked SBI and Redington as stocks you should be investing in. We're going to find out why on the other side.